we're really excited about the market right now. Finally the market started to broaden out. It's not just the technology sector. We have consumer staples, we have financials, we have energy that are all outperforming technology right now. Interest rates are still at 4.5%. They might creep up a bit to 5, but historically that's still low. That's still robust enough to have a really strong economy. Labor force is very strong. We might have a few headwinds with tariffs affecting inflation going forward, but overall this is a very strong economy. And as investors, we're just excited that it's not just the technology stock leading the way. That's right. A lot of times people lump semiconductors all in one bucket. What's unique about them is they create a chip to make products more energy efficient, whether it's your home devices, your refrigerator, your automobile, your smartphone. And this is very unique. We think potentially is somewhat resilient to even a weaker economy, as opposed to a semiconductor and an NVIDIA, which are primarily used for GPUs. They do have competitors. Monolithic Power Systems does have a major competitor. That would be Texas Instruments. But we think they're growing so quickly lately, and I'm not just saying that because the performance year to date and over the last 5 years has beaten Texas Instruments, but they're just they're smaller, so it allows them to grow much quicker. And we think this isn't going to slow down anytime soon. It has a 19 price earnings ratio. It has a bit of a dividend, and it's kind of the David versus Goliath story. Hewlett Packard Enterprises. So it spun off from Hewlett Packard. It partnered up with NVIDIA last year, which is a huge deal for them and for NVIDIA. Without Hewlett Packard Enterprises, NVIDIA suffers to create the GPUs. They partner with them. In addition to that, Hewlett Packard Enterprises is invested in the cloud. It also has a bit of a dividend, PE ratio of 11. I mean, compare that to any tech stock out there, and it's extremely attractive. Yes, JP Morgan Chase has been one of our favorite for years now. It's up, even though it's up significantly, up over 50% over the last 12 months. We think it has room to grow. Where the interest rates are, even right now, net interest margins are record breaking for them. If interest rates come down a bit, mergers and acquisitions should pick up. We think they're in a sweet spot. Jamie Dimon's been doing an amazing job. We don't think that's going to change anytime soon. And especially with these elevated interest rates, which we think are going to remain somewhat flat, at least until Q3 or Q4 of this year, is going to